Foreign investors are pulling their money out from the Indian markets in record amounts. According to NSTL data, they've withdrawn around 81,000 crore rupees from Indian equities. Now, this isn't just big, it's the largest sell-off by FIIs in 5 years, even outdoing the 62,000 crore rupees they pulled during the pandemic's peak. So naturally, this huge outflow has put pressure on our markets, which has been trading in the red. But this raises some key questions. First, why are foreign investors suddenly selling so much? Second, where is this money going? Now, before we dig into those, let's quickly understand who FIIs are and why they're so important to our market. So, FII stands for Foreign Institutional Investors, and these are institutions based outside of India, and these are foreign banks, asset managers, pension funds, and hedge funds that invest heavily in Indian financial markets. Now, they bring foreign capital into our stock and bond market, which can be a big deal because FIIs often invest large sums, meaning their moves can create significant shifts in the market. So if FIIs are buying up stocks, prices tend to go up due to high demand. If they're selling, prices might drop. That's why news around FII activity is closely watched. So why are foreign investors pulling money out of India right now? Let's break it down. First off, two major factors here is China and India's valuation concerns. The Chinese economy has been struggling to maintain momentum since the pandemic, but just recently, Beijing announced a large stimulus package for the economy. This includes measures like easing monetary policy and increased government spending, which is aimed at attracting global investments back to their markets. As a result, many foreign fund managers are now shifting their focus towards Chinese stocks. Now, India's current valuations are also relatively higher in comparison to other economies. Also, some sectors have shown weaker than expected earnings this season, which hasn't exactly helped investor confidence. So with high valuation and some earnings disappointment, FIIs seem more inclined to take profits where they can. And there's more. Globally, risk appetite has also been shrinking. Developments in the Middle East have created geopolitical uncertainties, and with the US presidential elections coming up, there's also a sense of caution in global markets. Now, these factors have also led FIIs to be a bit more conservative. Now, while foreign investors are selling, our domestic investors are going all in, actively buying into the market. Now, if you take a look at this chart, you'll see something interesting. Domestic institutional investors have actually bought more than what FIIs have sold in October. Now, this shows the strength of our local investor base, which has stepped up in a big way. Now, it's not just the domestic institutional investors, but our retail investors too are also playing a huge role here. Now, SIP flows are at an all-time high, and the assets under management for mutual funds have also reached record highs. Now, this consistent monthly inflow of money has also been a big support for the Indian markets, even when foreign investors are pulling out. Now, thanks to these strong contributions from domestic investors, the gap between domestic and foreign holdings in Indian equities has also shrunk to its lowest point ever. Now, what's the takeaway for you as an investor in these volatile times? Now, even though China is seeing a short-term boost from its stimulus measures, it still faces deep-rooted issues like the current property crisis, which continues to weigh on its long-term stability. And by contrast, India stands out as a more attractive long-term investment destination thanks to its solid economic fundamentals. Now, at the moment, however, FIIs are seeking alternative opportunities due to India's high valuation and the potential for better returns in markets where valuations and conditions are more attractive right now. Now, do know that this rotation is just a part of the natural flow of global capital, and India's solid fundamentals will keep it a favorable option for the long run. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.